Know when to buy or sell a currency pair. This video has many different subtitles, such as Vietnamese, Japanese and more. Please click CC button to select your language. In the following examples, we are going to use fundamental analysis to help us decide whether to buy or sell a specific currency pair. Each currency belongs to a country or region. So Forex fundamental analysis focuses on the overall state of the country's economy, such as productivity, employment, manufacturing, international trade, and interest rates. If you always fell asleep during your economics class or just flat out skipped economics class, don't worry. We will cover fundamental analysis in a later lesson. But right now, try to pretend you know what's going on. USD. In this example, the euro is the base currency and thus the basis for the buy-sell. If you believe that the US economy will continue to weaken, which is bad for the US dollar, you would execute a buy USD order. By doing so, you have bought euros in the expectation that they will rise versus the US dollar. If you believe that the US economy is strong and the euro will weaken against the US dollar, you would execute a sell USD order. By doing so, you have sold euros in the expectation that they will fall versus the US dollar. USDJPY. In this example, the US dollar is the base currency and thus the basis for the buy-sell. If you think that the Japanese government is going to weaken the yen in order to help its export industry, you would execute a buy USDJPY order. By doing so, you have bought US dollars in the expectation that they will rise versus the Japanese yen. If you believe that Japanese investors are pulling money out of US financial markets and converting all their US dollars back to yen, and this will hurt the US dollar, you would execute a sell USDJPY order. By doing so, you have sold US dollars in the expectation that they will depreciate against the Japanese yen. GBPUSD. In this example, the pound is the base currency and thus the basis for the buy-sell. If you think the British economy will continue to do better than the US in terms of economic growth, you would execute a buy GBPUSD order. By doing so, you have bought pounds in the expectation that they will rise versus the US dollar. If you believe the British economy is slowing while the American economy remains strong, you would execute a sell GBPUSD order. By doing so, you have sold pounds in the expectation that they will depreciate against the US dollar. USDCHF. In this example, the US dollar is the base currency and thus the basis for the buy-sell. If you think the Swiss franc is overvalued, you would execute a buy USDCHF order. By doing so, you have bought US dollars in the expectation that they will appreciate versus the Swiss franc. If you believe that the US housing market weakness will hurt future economic growth, which will weaken the dollar, you would execute a sell USDCHF order. By doing so, you have sold US dollars in the expectation that they will depreciate against the Swiss franc. Margin trading. When you go to the grocery store and want to buy an egg, you can't just buy a single egg, they come in dozens or lots of 12. In Forex, it would be just as foolish to buy or sell €1, so they usually come in lots of 1,000 units of currency, micro, 10,000 units, mini, or 100,000 units, standard, depending on your broker and the type of account you have. More on lots later. But I don't have enough money to buy €10,000. Can I still trade? Yes, you can. With margin trading. Margin trading is simply the term used for trading with borrowed capital. This is how you're able to open $1,250 or $50,000 positions with as little as $25 or $1,000. You can conduct relatively large transactions, very quickly and cheaply, with a small amount of initial capital. Let us explain. Listen carefully because this is very important. You believe that signals in the market are indicating that the British pound will go up against the US dollar. You open one standard lot, 100,000 units GBP/USD, buying with the British pound at 2% margin and wait for the exchange rate to climb. When you buy one lot 100,000 units of GBP/USD at a price of 1.50000, you are buying £100,000, which is worth 150,000 United States dollars. 100,000 units of GBP *1.50000. If the margin requirement was 2%, then 3,000 United States dollars would be set aside in your account to open up the trade. 150,000 United States dollars *2%. You now control £100,000 with just 3,000 United States dollars. We will be discussing margin in more detail later, but hopefully, you're able to get the basic idea of how it works. Your predictions come true and you decide to sell. You close the position at 1.50500. You earn about $500. When you decide to close a position, the deposit that you originally made is returned to you and a calculation of your profits or losses is done. This profit or loss is then credited to your account. What's even better is that, with the development of retail forex trading, there are some brokers who allow traders to have custom lots. This means that you don't need to trade in micro, mini or standard lots. If 1542 is your favorite number and that's how many units you want to trade, then you can rollover for positions open at your broker's cutoff time. Usually 5 p.m. Eastern Standard Time, there is a daily rollover interest rate that a trader either pays or earns, depending on your established margin and position in the market. If you do not want to earn or pay interest on your positions, simply make sure they are all closed before 5 p.m. Eastern Standard Time, the established end of the market day. Since every currency trade involves borrowing one currency to buy another, interest rollover charges are part of forex trading. Interest is paid on the currency that is borrowed. Interest is earned on the one that is bought. If you are buying a currency with a higher interest rate than the one you are borrowing, then the net interest rate differential will be positive, i.e. USD/JPY, and you will earn interest as a result. Conversely, if the interest rate differential is negative, then you will have to pay. Note that many retail brokers do adjust their rollover rates based on different factors, e.g., account leverage, interbank lending rates. Here is a table to help you figure out the interest rate differentials of the major currencies. This is benchmark interest rates. Please click the subscribe button and don't forget to check the description below for more information.